Hi, my name is Bill Ulibarri, and I am a state registered investment advisor. I own my own firm, Senecal Capital Management, and I've been in business, started at the Board of Trade as a runner in 1980, and I just can't take it anymore. I've been watching these fin influencers on Instagram offering financial education, and a lot of them are really good, but I'm telling you, for some reason, there's this obsession with the Vanguard ETF symbol VOO. And I just want to do a quick deep dive, and I think how you can do better. Now, today is Tuesday, March 3rd, 2026, and the market was down about 900 points early in the morning, but it's come back a little bit since then. But what I want to bring your attention to is this chart of the Vanguard Growth ETF, symbol VUG, and the Vanguard Value ETF, symbol VTV. Now, you can see that Vanguard VUG is 45%, almost 46% oversold on its 10-week moving average, and symbol VTV is actually 78% above its 10-week moving average or considered overbought, oversold. And this is the thing I want to bring to your attention. If you look at this chart here, if you take the price of VUG divided by the price of VTV and then multiply it by 100, you're going to get this scale, this legend over here on the right-hand side. And all I'm asking you to consider is rather than just being this mindless set and forget VOO person, that you take a look at the relationship between growth and value. Now, in a column of X's here, this is old school point and figure charting. X means demand. X usually means it's going up in value. The letter O that you see over here and here means supply. People are selling. So this is a chart of supply and demand, buying and selling of the Vanguard Growth versus Vanguard Value. When it's in a column of X's, it means growth is risk on. That means that people want to take aggressive risk. They want to invest in the market. But when we're in a column of O's, it means we have to play a little bit of defense. So you can see here, since November of 2025, value has performed better than growth because growth is in the column of O's compared to value. And that actually proves itself out on the overbought, oversold, where we saw value is 78% above its trend line and growth is 50% below its trend line. So if you want to just invest in symbol VOO, go ahead. It's kind of like the lazy way of doing it, and it's, I think, overdone because everybody does it. But just consider this. If you can figure out a way, and I just told you how to do it. If you want to uh, if you want to pair growth versus value, you can almost double your returns over time. And this is just going back 5 years to 2021. The 10-year returns are even more compelling, where the S&P 500 and symbol VOO are up exactly the same, about 231% ballpark, where the switching strategy is up about 413%. So I think you could do a lot better than just being a buy and holder with VOO. And again, Instagram financial education is pretty good. I follow a few people. I kind of like what they have to post. But the truth is, if you are just set and forget VOO or SPY, I think you can do better with an Excel spreadsheet or Google Sheets. Keep track of the calculations yourself, do some very simple arithmetic, and just try to figure out that band of how far growth is over value or value is over growth, and just lean your portfolio a little bit in the direction that most favors that asset class because they don't always work all the time. Sometimes growth is on, sometimes value is on. Sometimes we're aggressive, sometimes we need to be defensive. And like a pendulum that swings back and forth, there are times they have risk on and times they have risk off. And thank you so much for listening. If you have any questions, DM me and I'll be happy to answer your questions. Or if you want a back-tested strategy to see how your portfolio might be able to have done better over the last 10 years by just taking a simple look at growth versus value, I'll be happy to send it to you. This is Bill Ulibarri again with Senecal Capital Management.